Welcome to the Morningstar series Market Reaction. I'm Emma Wall and I'm joined today by Richard Titherington, Chief Investment Officer for JP Morgan, Emerging Markets Asia Pacific. Hello, Richard.
Hi.
So you've talked of a weaker US dollar being a tailwind for Asian equities. I thought we could take a step back and explain why the US dollar and emerging markets, in specific Asian equities, are correlated in this way.
Well, I think there's a couple of reasons for that. First one is, of course, when the dollar is weakening, that tends to be a positive for the global economy because financial conditions, monetary conditions are improving, so liquidity is rising. And when you have the global economy recovering in that kind of way, that tends to be a positive for Asian and emerging market equities because they are that bit more geared into the global economy. The other thing, which of course is important, is that to a certain extent, the dollar is a bit of a risk barometer. When people are nervous, they tend to move towards the dollar. So in periods where you have market volatility or market fear, the dollar tends to rise as a safe haven. And of course, in periods of market fear or volatility, that tends to be negative for equities. So those, I think, are the two key reasons for it.
And looking specifically at now, we of course have had this global growth over the last year, which has been synchronized, much to the surprise of many people, I think. But we haven't had low volatility in the last couple of months. So what's unique about this particular situation, which is causing sort of that US dollar weakness and indeed the positive for the Asian equities?
Well, what's interesting, I think, is that, as you say, volatility has picked up, but actually the dollar hasn't strengthened. So although there's a lot of concern around whether it's trade or whether it's market valuation, the fact that the dollar is staying stable or even weakening gives me a bit of confidence that although I would expect 2018 to be a year of higher volatility, I think it's important to remember 2017 was unusual, or kind of the best of all possible worlds. And we should expect 2018 to be a more volatile year. The very fact that that isn't being accompanied by the dollar spiking means that the outlook for Asian equities, I think, still looks pretty positive.
And the US dollar being weak is not the only reason why you're positive on the region at the moment. Perhaps you could explain what else is helping to sort of support Asian equities in 2018.
Well, I think there's a couple of things going on. Firstly, as we talked about earlier on, rising globally growth is good for Asia. What does that mean? It means that corporate profitability is improving. And as corporate profitability improves, again, that tends to be a positive for more cyclical companies in Asia. And then thirdly, what we're seeing as we're moving from 2017 into 2018 is an environment where more companies are giving you positive earnings surprises. And generally, markets like it when you have positive earnings surprises. So those three things all working together mean that the outlook for Asian equities, I think, still continues to look pretty good.
And what about sentiment? Because a couple of years ago, particularly in the developed market investor space, UK retail investors were very nervous about China and the surrounding region. And that meant, of course, that flows were negative and indeed that affects volatility. Now it seems that people are pretty sanguine about the region. They don't seem to be as concerned as they once were. Does that also provide a tailwind?
It does. I mean, one shouldn't be complacent about it, but you're right. If you went back 2 years ago, everything about China was bad, everything about emerging markets was bad. The only place to be was in the US. Whereas if you look today, although there are still things to worry about in terms of China, people are more optimistic about the outlook for China. The Chinese economy is doing relatively well, and China being the biggest single part of Asia, that does make a difference. So you're right, sentiment is steadily improving towards the asset class. And as I said earlier on, the key thing is that you're seeing corporate earnings recovering, and that's particularly important, I think. If you're running strategies that have a bit more growth orientation, then I think that's a big positive.
Now, we don't want to be accused of being overly optimistic. You did say there were a couple of things to be worried about. What are those potential clouds on the horizon?
Well, I think the first thing that people need to recognize is that 2018 will be more volatile in terms of market sentiment movements than 2017 was. We've seen that already at the beginning of the year. That shouldn't be a surprise to people. Second thing is, clearly people are nervous about the tariff wars going on at the moment. I don't think that's a hugely significant issue, but it's something that people should recognize. And of course, the third thing that we need to remember is that interest rates are going up. That could be a problem. And as I said earlier on, I would expect at some point during this year, you will see an equity market sell-off. But rising interest rates reflect the fact that the global economy is doing better, and broadly speaking, Asia is a big beneficiary of an improving economic cycle.
Richard, thank you very much.
Great pleasure.
This is Emma Wall from Morningstar. Thank you for watching.